Welcome to the Deep Dive. We're the show that really gets into the weeds, cuts through the noise to find those key takeaways from the latest market happenings.
That's right.
And today, we're looking at CommScope Holding Company Inc., ticker KOMM, specifically their Q2 2025 earnings call. This was back on August 4th, 2025.
Yeah, and while the numbers themselves were, quite good.
Definitely impressive.
They were really just setting the stage, weren't they, for this massive strategic shift?
Totally. A monumental announcement, really. It's completely changed how people are looking at CommScope. It's a real transformation story we've got here.
Definitely has investors buzzing.
Okay, so let's lay out those Q2 numbers first, just to, set that stage you mentioned.
Good idea.
So for Q2 2025, CommScope reported GAAP EPS, earnings per share, of 0.005 cents. Now, compare that to last year, a loss of 0.34 cents. So quite a turnaround.
Significant improvement, yeah.
But the non-GAAP number, that was the real eye-popper, $0.44 per share.
Which just, crushed the consensus estimate.
Yeah, absolutely.
Yeah.
By about 91%, just blew past them. And revenue, also very strong, $1.39 billion. That's up 31.7% year over year.
And again, surprising analysts. Beat consensus by around 11%.
Yeah. Operationally, too, they look sharp. Non-GAAP adjusted EBITDA hit $338 million.
Which is an incredible 79% jump from the year before.
79%, and the margin up 640 basis points to 24.3%. That's, 6.4 percentage points higher. Pretty efficient.
Definitely shows better operational leverage. And they generated cash, too.
Right. Operating cash flow is $77.1 million. Free cash flow, $64.5 million. Solid.
And looking forward, the operational metrics looked good. Order rates up 26% from the previous quarter.
Yeah, sequentially. And that pushed their backlog up 23% to over $1.4 billion. $1.431 billion to be exact.
So robust numbers all around. But like you said.
But yeah, they kind of pale in comparison to the big news, don't they?
They really do.
Because the real game changer, the headline from this call, was the announcement of a definitive agreement to sell their connectivity and cable solutions business, the CCS unit.
A huge part of their traditional business.
It is. And they're selling it to Amphenol. All cash deal. Valued at a, frankly, staggering $10.5 billion.
$10.5 billion. That's a number that gets your attention.
It really does. And CEO Chuck Treadway, he called it a transformational deal. Said it unlocks equity value, enables shareholder returns.
He actually said, didn't he, that the equity price wasn't reflecting the true value?
He did. Quote, equity price was not reflective of the true value of our company. And this deal now brings improved clarity to CommScope equity value. Pretty direct.
Very direct. And the deal's expected to close, first half of 2026?
That's the timeline. So what's really fascinating here, I think, is why they're doing this and what they plan to do with that cash. It's not just a sale.
Exactly. What's fascinating here is the strategy behind it. It's not just about getting rid of an asset. It's a very clear signal, moving away from being this complex, kind of undervalued conglomerate.
Right. The market struggled to value all the pieces.
Precisely. Towards being a much more focused company, really poised for growth.
So that $10.5 billion price tag, what are the net proceeds looking like?
Well, after taxes, expenses, all that, they're estimating around $10 billion net.
Okay, $10 billion. And the plan for that cash?
It's crystal clear. They spelled it out. Use it to repay all existing debt.
All of it. Wow.
All of it. And redeem their preferred equity, too. So a massive deleveraging. Then they'll add back a bit of modest leverage to remaining businesses. And the plan is to distribute significant excess cash.
Back to shareholders.
Exactly. As a dividend. Expected within 60 to 90 days after the deal closes.
Okay, so connecting this to the bigger picture, as you like to say.
Yes. If we connect this to the bigger picture, this fundamentally transforms the balance sheet. It tackles those leverage concerns head on. Which
had been a drag on the stock for a while, right? What was the leverage ratio?
End of Q2, net leverage was 6.6 times. That's expected to drop dramatically after the sale. So yeah, it resolves that multi-year challenge. It's a strategic pivot, shedding that conglomerate discount, like you said, and emerging as a leaner, growth-focused company.
That conglomerate discount point is key because it changes the narrative, how investors see them now. So, okay, let's pivot ourselves. Let's talk about the remaining Kubu.
Right. What's left after the sale?
Access Network Solutions, ANS, and Ruckus. This is the core of their future strategy and their Q2 performance. Absolutely on fire.
Yeah, the numbers there were really strong.
Combined revenue for ANS and Ruckus, $513 million. That's up 58% year over year. 58%.
Incredible growth. And the profitability.
Adjusted EBITDA, $127 million, which is, get this, a 326% increase year over year.
Wow. 326%. That's something else.
It really is. And management was clear, right? After maybe a slower 2024 recovery, these segments are now set for continued strong performance.
Seems like the investments are really paying off now.
Here's where it gets really interesting, I think. We're seeing those investments bear fruit. For ANS, record deployments of new DOCSIS 4.0 gear, amplifiers, nodes.
And DSISS and SHE 4.0, just for context, that's the next-gen cable tech, multi-gig speeds, up and down, crucial for handling bandwidth demands.
Exactly. And they name names. Key wins like the FDX amplifier deployment with Comcast.
FDX being full duplex DSISS, simultaneous upload-download.
Right. And more ESD amplifier sales with Charter.
ESD, extended spectrum DOCSIS, using more spectrum for data.
They also mentioned new unified products and testing, successful virtual CMTS wins.
Virtual CMTS, basically moving the cable modem termination system into software, more flexible, more efficient for the cable operators.
Yeah, and it seems like their strategy is shifting, working directly with the big MSOs, the cable companies, developing products for them, rather than a sort of one-size-fits-all approach.
Makes sense. Tailored solutions for key partners.
And then there's Ruckus, equally impressive, revenue up 47% year over year.
Also very strong growth, driven by
new Wi-Fi 7 products, for one. Much faster speeds, lower latency, also growth in subscription services, and their vertical market strategy seems to be working.
And that channel inventory issue seems resolved too.
Yeah, they mentioned the positive impact of channel inventory normalization. So basically, distributors had worked through excess stock, and now they're ordering the new advanced stuff again.
Which is great timing with Wi-Fi 7 and their AI focus.
Exactly. The AI-driven networking solutions they launched earlier, using GenAI, Edge AI, intent-based AI, particularly in their RuckusONE platform.
Making networks smarter, more automated.
Seems like it. Plus, they're adding sales resources and getting traction in the service provider market, especially with RuckusONE MDU solutions for apartment buildings and the like.
So if we connect this to the bigger picture...
Go on.
Well, this strong performance in ANS and Ruckus, especially with these advanced products, it's clear validation. Those investments they made over the last 3 years, they're generating real returns now.
It's not just a blip.
No, I don't think so. And they've got macro tailwinds helping them. Ongoing DOCSIS upgrades, massive demand for data center and AI build-outs.
Right, all that AI infrastructure needs networking.
Exactly. And just the general push for better broadband and networking globally, these segments are right in the sweet spot.
Okay, but what about potential headwinds? Like tariffs, trade issues?
That raises an important question, yeah. But they addressed it. They seem very proactive. They have plans to mitigate the effects using their global manufacturing flexibility, their broad supplier base, smart commercial tactics.
So they're managing it.
They expect minimal net impact. They pointed out USMCA compliance for stuff made in Mexico, tariff exemptions for many Ruckus products. It seems like a disciplined approach, you know? Controlling what they can control.
Which lets the core business performance shine through.
Yeah.
Okay, so building on that strength, they also raised guidance, didn't they?
They did, significantly. Full year 2025 adjusted EBITDA guidance for the whole company, pre-divestiture, now $1.15 billion to $1.20 billion. Up from $1.0 billion to $1.05 billion previously. A pretty hefty raise.
And specifically for the RemainingCo, for ANS and Ruckus.
For 2025, they're guiding to between $325 million and $350 million in adjusted EBITDA.
Okay, but they did caution slightly about the second half, right?
A little bit, yeah. They said H1 was exceptional, especially for ANS with some project timing and license sales. So they expect H2 adjusted EBITDA for RemainingCo to be slightly lower. Partly some one-time items, partly just the nature of ANS being a project-driven business.
Revenue can be a bit lumpy in that space. Makes sense.
Exactly. Standard seasonality in infrastructure projects.
So this raises an important question, maybe for you, the listener, too. What are the key catalysts going forward for this new, leaner CommScope?
Well, number one is obviously getting that CCS sale done successfully, closing the deal.
And then executing that dividend plan.
Absolutely. That's crucial for returning value. Post-divestiture, the focus will be on margin progression in ANS and Ruckus. Are those new products driving profit growth, not just revenue?
Right. Need to see that bottom line improvement continue.
And continued adoption of the AI networking solutions, growth in enterprise fiber. These are the things to watch. But like we said, they're really well positioned with those macro trends. AI infrastructure, data center build-outs, that should propel them.
So how did the market react to all this? We touched on it, but
It was overwhelming. Just massively positive.
that stock jump was something else. After hours, right after the announcement, the stock shot up about 86.3%.
Yeah, closing around $14.51. It had been trading in the low single digits before the news, an incredible move.
And the commentary from analysts media.
Highly bullish, praising the strategy, the value unlock. You look at the performance now, CommScope is a huge outperformer.
What are the numbers?
Well, the one-year return is somewhere between plus 283% and plus 339%. Compare that to the S&P 500 at roughly 16%.
Wow, massive difference.
And even just the last month, around the time of the call, the one-month return was nearly 99%.
So what does this all mean? What's the big picture takeaway here?
I think this marks a really pivotal inflection point. It's CommScope shedding that debt-heavy past, repositioning as a focused, streamlined networking innovator.
Moving from turnaround mode to growth mode.
Exactly. It's a strategic relaunch focused on high growth, returning cash. And we saw signs even before the call, like launching that XP&D fiber platform shows ongoing innovation.
And the results back it up: better margins, more orders, bigger backlog, strong cash flow. Shows credible execution.
It does. So for listeners, it really makes you think, right? What does this mean for other networking infrastructure players, especially those embracing AI and next-gen tech? Does this set a new playbook for unlocking value in diversified companies?
Interesting questions. Okay, now before we get too carried away, quick word from legal.
Yes, the necessary disclaimer.
The following segment is strictly for illustrative purposes. It is absolutely not financial advice. Don't take it as investment recommendations. We're just, having a bit of fun, a thought experiment for experienced investors, pitching some outrageous but plausible trade ideas.
All right, let's brainstorm some potential scenarios, keeping in mind this is purely hypothetical.
Okay, idea one.
Idea one, long RemainingCo, short OldCo.
Okay, explain.
Premise. The market, even with that huge jump, might still be figuring out the full implications here. The new CommScope, the RemainingCo, it's a pure play now. High growth, AI, duo CSI's focus, no legacy debt baggage, no slower segment holding it back. Clear story.
Makes sense.
Trade. So after the divestiture closes, after the dividend is paid and RemainingCo gets its own ticker, you'd initiate a long position there. At the same time, you might consider shorting a comparable but sort of undifferentiated legacy telecom infrastructure company, one that maybe lacks CommScope's 8OTSC's 4.0 focus or doesn't have a big deleveraging catalyst like this. If you can find a liquid short, that is.
Right.
Rationale. You're trying to capitalize on that clear value unlock and focus of the new CommScope. The big dividend goes to current shareholders before the split, sure. But going long, the future remaining POC aims to capture the appreciation from its clean narrative and growth drivers. And the short acts as a potential hedge against broader industry risks.
Interesting pairing. Okay, idea two.
Idea two. Leveraged options play on the dividend announcement.
Playing the catalyst.
Exactly. Premise. They've clearly stated they'll pay out significant excess cash as a dividend, 60-90 days post-close, likely sometime in H1 2026. That's a predictable major event.
So the trade.
Trade. Buy out the money call options. Specifically, calls expiring just after that expected 60-90-day dividend announcement window in H1 2026.
Out of the money meaning strike prices above the current price. Cheaper options, but need a bigger move.
Correct. Higher risk, higher potential reward. Rationale. The dividend itself is expected to be substantial. Announcing the exact, likely large figure could generate more positive buzz, potentially driving the stock higher, especially if the amount beats expectations. This is a highly leveraged way to bet on that specific value-returning event happening for the post-divestiture company.
Definitely high risk, high reward potential there.
Okay.
Good thought experiments. Remember, folks, not advice.
Absolutely not advice, just exploring possibilities.
So let's wrap up this deep dive on CommScope's Q2 2025 call. Key takeaways. Outstanding results, yes, but overshadowed by that truly transformational $10.5 billion sale of the CCS business.
Which positions the RemainingCo, ANS, and Ruckus as this focused, high-growth player really leaning into AI and next-gen networking?
The market reaction, massively positive. Guidance, significantly raised. This feels like the start of a whole new chapter for CommScope.
It really does, a strategic reset.
Well, thank you for joining us on this deep dive. As CommScope moves forward, shedding its past, embracing this leaner, tech-focused future, it really makes you think about the wider implications, doesn't it?
Yeah, what does this mean for the competitive landscape? How will their AI solutions change connectivity? Definitely questions worth exploring.
Absolutely. Until next time, keep digging for those insights. Stay curious.